Something's happening to silver, and right now it's being crushed by a $7 billion sell-off. But here's the twist. The more silver gets sold, the more it seems to rise. You might think that's impossible, yet it's happening right now. If you've been watching silver's movements, this doesn't make sense, and that's exactly why you need to keep watching. The clock is ticking toward January 15th, and that's when everything changes. This is where most investors get it wrong. I'm about to show you why that happens and why the next few days could be your biggest opportunity. But first, let's set the stage, because you're missing something crucial. Right now, silver is being pummeled by billions in forced selling, and yet it's not crashing as expected. In fact, it's holding its ground, outperforming gold by a factor of 5. But why? This isn't just a one-off event. This is part of a much bigger pattern, one that has been unfolding for years. Every headline you've read about silver's collapse, they're all missing the real story. What's happening right now is the result of a massive mechanical shift in the market. And unless you understand it, you could be making a big mistake. So here's the question. Are you seeing the whole picture, or are you just reacting to the noise? Here's the reality most people aren't talking about. There's a $7 billion sell order happening right now, and it's not driven by panic. It's coming from index funds that are legally required to dump silver by January 15th. That's right, by law. It doesn't matter what's happening in the real market, they have to sell, regardless of price or fundamentals. This forced sell-off is creating a massive illusion in the market, making people think silver's in trouble. But here's the catch. Despite billions in sell orders, silver is still climbing. Notice what's missing from all the headlines? The real buyers, the ones who are soaking up all this forced selling. The physical market is quietly absorbing the blow, and that changes everything. Now, here's where things get intense. This $7 billion sell-off isn't just an isolated event. It's part of a system that's been set in motion for years. Let's look back at how these things have unfolded in the past. The forced selling of this magnitude isn't new. It's part of a larger pattern that's played out across markets. But here's the problem. The system is normalizing these shocks, making them seem like a routine part of the market. And that's dangerous. When you see $7 billion in forced selling, you're watching a moment in time where the rules are being broken. It's the market's pressure point, but almost no one sees it. It's a reality check that most people are missing. And when the pressure finally releases, it's going to shift everything. This is where the plot thickens. The forced sell-off isn't just causing panic, it's creating a massive gap between the paper market and reality. The real kicker, as silver is being dumped at breakneck speed, the price is still climbing. How can that be? Here's where the contradiction becomes clear. The paper market is in free fall, but physical buyers are stepping in big time. And here's the thing that changes everything. When billions in forced selling can't push silver down, that tells you there's something powerful underneath the surface. These are not just retail investors scrambling. They are deep-pocketed buyers positioning themselves for the future. They're not selling, they're stacking. And that's why the price is defying expectations. When this forced selling stops, the market is going to snap back harder than anyone is prepared for. Now, things are getting chaotic. This isn't just one thing happening, it's a chain reaction. First, you've got the $7 billion sell-off. Then, the physical market is absorbing it, but it doesn't stop there. Silver's price is fluctuating wildly, and it's not because of what's happening in the real market. It's the result of passive funds scrambling to meet their legal mandates. But here's where it gets wild. These funds can't control their timing. They're stuck in a 5-day window, and they can't get out until January 15th. The selling pressure is relentless. As this mini crisis stacks up, the market structure is cracking. The question is, what happens if this continues? The answer's simple. Everything changes once this forced selling ends and the market starts to correct itself. Now let's talk about you, the person watching this. This isn't just some abstract market event. It's real, and it's happening now. If you're holding silver, you're likely feeling the weight of this forced sell-off. Prices rising and falling, headlines pushing panic. It's all designed to make you second-guess your position. But here's the thing. This market volatility isn't just about numbers on a screen. It's about people. People like you who are trying to make sense of this mess. If this feels familiar, if you've been there before, say so in the comments. You're not alone in this uncertainty. but understanding what's happening behind the scenes gives you control. You don't have to be a bystander. When you understand the dynamics at play, you can make smarter decisions. And that's the difference between being caught in the panic or taking advantage of the opportunity that's unfolding right now. Here's where the game changes. What you're witnessing isn't a simple sell-off. It's a mechanical event driven by systems, rules, and forces far bigger than individual buyers or sellers. The index rebalancing, the $7 billion forced sell-off, isn't just a glitch in the system, it's a symptom of a larger issue. It's a reminder of how fragile the markets are. When index funds are forced to sell, it exposes a structural flaw in the system, the disconnect between paper and physical markets. It's a massive gap that can't hold forever. The question is, how long will the markets let it play out? When the forced selling stops, the system will reset. The physical market is absorbing this pressure, but only for so long. And when the natural supply and demand dynamic returns, things could shift in a way most people don't see coming. That's the power of systems. Once they're disrupted, the recovery can be just as dramatic. Let's look ahead. There are two possible paths forward here, and neither is certain. First, you could see a violent snapback once this forced selling ends. After January 15th, the liquidity vacuum will fill up and prices will likely adjust, possibly in a big way. If the physical market continues to tighten, the price could surge. But there's also the chance that things could stabilize for a while longer. The uncertainty here is huge. The real question is, when does the forced selling stop? And how fast will the market react once the pressure is off? What you're witnessing now isn't just about silver. It's a battle between paper markets and the reality of physical demand. The momentum is building, but no one knows exactly how this will unfold. One thing is clear, though, the clock is ticking and the next move is coming fast. Here's the insight you need to walk away with. The current silver market is being manipulated by forced selling, but this won't last forever. The $7 billion sell-off is a temporary event caused by mechanical rebalancing, not a fundamental shift in silver's value. Once the forced selling ends, the market is going to snap back. And when it does, the opportunities could be huge. But here's the catch. You have to be patient. The market won't give you a press release when the moment comes. It will be fast and it will be fleeting. The real question is, are you ready to act when it happens? Because if you wait too long, you'll miss it. Stay tuned, stay smart. And if you want to continue getting insights like this, make sure to follow and subscribe. The next big move is already on the horizon and you don't want to miss it.